Welcome back to Community Roundtable. I'm your host, Henry Huang. With us today is Ms. Carol Quan. She is the Special Assistant to the Rick Auerbach Assessor's Office. Our last segment, we were talking about people can actually file a notice to the assessment board to have the property value reassessed.
Well, basically, any property owner can file for a reduction in value if they believe that their assessed value as of January 1 is higher than the market value as of January 1. And our filing deadline with the assessor's office is December 31st, 2008. However, if you were to file today, we would also encourage you to contact the Assessment Appeals Board and file an application with them. You can request an application from the Assessment Appeals Board by calling them at 213-974-1471. And basically, the Assessment Appeals Board is an independent body that would hear appeals between the assessor's office and the property owner. Because if you're filing a Prop 8 decline in value application with our department today, we will not have a chance to review it in time to let you know and to make a correction to the bill before the December 10th, 2008 due date. So in order to protect your right to an appeal, let's say you're not satisfied with the response we give you in December, you don't think our reduction is low enough, or maybe we don't reduce it. So you would then have the opportunity to appear before the Assessment Appeals Board and have them hear your case, and they will decide whether or not a reduction can be made on your property.
Now, can you file the appeal conjunctly to both your office and as well as the Assessment Board's office?
Yes, you can file an application with the Assessment Appeals Board. Be sure to file it by November 30th, 2008. However, because November 30th is on a Sunday, you would have until December 1st, 2008 to file with the Assessment Appeals Board. You can also file the decline in value application with the assessor's office, but that deadline is December 31st, 2008.
Okay, so what happens if someone files these appeal and then your assessment came out to be that, yes, their property value was actually lower than first assessed in the beginning of the year. Now, since they already paid the first installment, do they get a reduction or a refund back? How would that work?
Okay, let's say you've already paid the first installment based on the higher assessment. If our department grants a reduction, then the second installment will be adjusted. So the second installment is due April 10th, 2009. So that portion would be less.
Oh, I see. Yeah.
You would receive an adjusted annual bill.
I see. Yes. You have to remember those 2 dates. I remember I have to pay them postmarked. It doesn't have to be received, right? It just postmarked before December 10th and April 10th. But of course, we encourage you to mail in as early as possible to avoid, possible penalties and stuff like that.
Yes, but what's also great right now is that the Treasurer Tax Collector's Office has a feature where you can pay through V-Check. You could pay online, and the money would be deducted from your checking account.
Well, is there?
And there is no charge to do that.
It's completely free. Well, that's a very convenient service because I always remember that I've been paying these bills by check. But is it safe to do so? I mean, is there because when I write a check to the assessor's office, I always know that I will get a return check as my proof of payment. So when you do these, automatic payments online or deduction from your checking account, do the people get a receipt of some sort to prove that they make the payment?
I believe that when you pay online, that there's usually a screen at the end that you can print, which would act as a receipt that you did pay online. And not only that, you can always reconcile it when you get your credit card statement. At the end of the month, it would show that there was a payment made. And so when you write your check, so you're writing it out to the Los Angeles County Treasurer Tax Collector's Office. and of course you would get a copy of the canceled check or whatnot on your banking account, so you'll know that the taxes were paid.
Right. Okay. And other interesting questions that I have is, I know that we're in a declining housing market. Mm-hmm. I know that from your sharing with us is that we can actually appeal and maybe get a reductions in our property tax bill. But what happens 3 years down the road? All of a sudden, we have a run out with the housing price again.
Okay.
Say, your assessed value this year, you bought the house for $500,000. For the next year, 3 years, it will assess at $400,000. But at the beginning of the fourth year, it went back up to $500,000 or possibly $600,000. How would the difference? How would it apply in terms of assessment of these property values?
Okay. Well, it's a great question, because basically the decline in value, Prop 8, is a temporary reduction. So once the market comes back, let's say in 4 years, the market values skyrocketed to $700,000.
Right.
That's the market in 4 years.
It happens in California.
Yes. It can. We have those wild swings every now and then.
Right.
But under the law, all we would do is we would restore your value to what it would have been had you never received the reduction at all. So we would restore the base value, and we would add back the deferred 2% increases for the years that you did not receive the 2%.
Okay.
So basically in the fourth year, you would be restored to what we call your trended Prop 13 base value. We would not bring you up to $700,000. So we would put it back to the $500,000 plus the 2% that had accrued in the last 3 or 4 years.
So $500,000. So basically, it's like an 8% increase in the assessed value, right?
It's about a little bit more than that.
Because it's an accrual basis.
That's right. It's an accrual basis.
A little bit more than 8%, and that would the house owner started paying at that price.
Right. The property owner the value would be back to where it would have been had they never received the reduction in the first place. They're not going to be reassessed to the market value in 4 years. It's going to go back to a trended Prop 13 base value.
I see. I encountered this before. I have a neighbor whom have owned their house for 30 years. And they bought it at a value probably only like $50,000, like $50,000. And I know it's a lot more, like many times more than that. But they're saying they only paying their property taxes at very, very low. For example, right now it runs about $600,000, but they're only paying probably about $1,000 in property value tax every year. Is it because they never done any transaction on it, so it retained at that house price, or how does that go?
Well, basically, when Prop 13 passed in 1978, it basically told the assessor, you can only reassess property when there's a change in ownership, when there's new construction, or when there's a decline in value. So if the property owners own their home for 30 years, they still have their old base, because under Prop 13, when it passed in 78, we established a 75 base value. And so once we establish a base value on the property, it cannot go up more than 2% a year. Doesn't matter what the market does, it goes up no more than 2% a year.
I see.